Hey guys, Marvin Germo here. I'm back in Manila, giving you updates on what's happening in the market and in the Philippine economy. Today was a very interesting day. Aside from the Boston Celtics beating the Philadelphia 76ers, there's a lot of things that have been relatively game-changing, a lot of things that have been expected, a lot of things that may significantly impact the economy and the markets as a whole over the short, mid, and long term. So let's break things down. The market closed above 7,500 again. No significant movement, no significant movements upward, no significant movements down. But from a trend perspective, pretty much the PSE is still in a downtrend. The PSE is still bearish. If you are a position trader, please stay away from the stock market yet. There's no reversal signals yet. And as what I said in the previous videos, a stock that's going down will just continue to go down until proven otherwise and until something shifts. So aside from that, what are the things that are happening in the market? Early this morning, our GDP was announced. We have a 6.8% GDP, which on my perspective was hit a lot by inflation. We could have gone higher. We could have hit past 7%. We could have been at par with what Vietnam is doing in their economy, but 6.8% is pretty much hit by inflation. You have to understand this. As what I've mentioned in the previous videos, that the train law, high oil prices, and also high dollar has pretty much affected the buying power and the capacity of Filipinos to actually purchase. We're still, don't get me wrong, we're still a consumption-driven economy. However, be that as it may, prices have gone up already because of key things that have happened in policy, especially in taxes. So the 6.8% GDP is still good, it's still one of the strongest. It still places us above 6%. It still places us faster and higher up against all of the other regions. However, I was actually expecting us to go higher sana. I wanted us to go higher, but inflation has hit a toll on us. So that's one. Second, what everyone was expecting already. The BSP raises interest rates by 0.25%. From 3% we're up 3.25% already. So this is something that has been pretty much, I guess, expected by a lot of people already. People were already expecting and begging the BSP to raise rates in the foreseeable future. But here's the thing: all of the changes that we're seeing, all of the movements, it's pretty much on the supply side. For me, the changes won't, increasing the interest rate won't really beat inflation as of this point in time, because all of the things are happening on a supply side basis. But how does this impact the stock market? As you all know, from a investment standpoint, this gives fixed income. This gives a fixed amount of money to people who are investing in fixed income instruments. It gives 0.25 extra earnings to a lot of funds, investors who would want to get a fixed rate of return. So what does this do from a short-term basis? From a short-term standpoint, this affects placements in the stock market, meaning money that are placed in more volatile or equity risk-based investments will shift to more fixed income assets, as we will see more fixed income instruments go up because of this. So in turn, also expect a move, expect a shift also in funds from equity to bonds or fixed assets. However, to balance everything out as well, the market has dropped from around 8-9 to where it is right now. We're down 1,400 points. There's also a feature that it's pretty much priced in. The movement that you're seeing already is pretty much expected already in the markets in general. So here's the thing: instead of guessing if it's priced in or not, instead of speculating if this is it already, we're done, this is already the bottom, just follow the trend. And the trend is saying that we're still in a downtrend. There's still no reversal signals, and there's still no indication yet that we're headed up. So what this does is, at least the cat is out of the bag already. What we've all been expecting, what we've all been speculating or guessing, that there will be a rate hike, it actually happened already. So we can go on and move forward with other things that will possibly move markets from an economic perspective. So two important things: GDP at 6.8%, which is still fast, which still places us as one of the fastest in our region, and interest rate hike to 3.25%. Couple of things as well. To all those who've been following Jollibee, I mentioned that in a Facebook post that Jollibee is positioning, and they've invested 45 million Singapore dollars, or around 45% own the master franchise of Tim Ho Wan in Asia. So that's interesting because I've been a fan of Tim Ho Wan for a very long time. So what's interesting about that is this: Jollibee has been picking up global brands left and right, from Smash Burger to a lot of the pho brands in Vietnam, to Dunkin' Donuts in China, to the speculation that they will actually be part and buy Pret a Manger in London or in the UK. Jollibee is not just positioning itself as a local brand anymore. They're trying to buy and pick up a lot of brands that are known worldwide. And Tim Ho Wan's a pretty good brand. Amazing food, amazing amazing products, from their dim sum to their buns. I'm a big fan of this, so I was pretty much excited that a local company will have exposure to it as well. So I think this will be Jollibee's foothold to an even larger space in our region as well. So that's all for now. GDP at 6.8%. You have interest rates increased to 3.25%. Jollibee has purchased 45% of Tim Ho Wan, and you have the market above 7,500, still bearish, still in a downtrend, still with no signs of reversal. So that's it for now. I'll try to give you more specific updates on specific stocks as the day passes now. And it's nice to be back in Manila. As you see, we're traffic, sobrang traffic. No, it's but there's no place like home still. So that's it for now. I hope this video helps you trade well, trade strong, trade smart. Please remember this: regardless of what happens, don't trade based on emotions, don't trade based on what other people will say. Trade based on your own understanding, trade based on what you studied, and based on technicals and fundamental analysis. So that's it for now. Have a great day ahead. My next event will be Icon 2018, May 26. The link will be below. I hope to see you there.